Hello everybody, San Diego Real Estate Market Update November 2020, right after the US elections with one of the highest voter participation in 100 years. 50% of you will be happy, 50 won't, but let's see how it all translates into real estate and your bottom line and how I can help you analyze it. Don't forget to subscribe. My name is Lenska with Lenska Realty. I'm an investor and a real estate agent, and let's dive into it. We're looking at different real estate data points, analyzing a market. Sales and inventory numbers, interest rates, employment data, HPSI by Fannie Mae, home builder sentiment, evictions and foreclosures and forbearances. So sales and inventory numbers for October. So here are the key statistics. We have a median home price of $645,000, which is a 12% increase, but we are down from $665,000. So that is our first downturn in this crisis. The median home price for detached is down to $749 from $756, which still year over year is a 12.6% increase. And the median home price for attached is currently at $475,000, down from $491,000, which results in an 11.5% increase. Days on market, we're still selling very fast, as an average about 28 days and median about 9 days. Pending sales are kind of flat year over year, but sold listings for attached and detached are up. And but year to date, we are kind of unchanged. So with all the hoopla and all the excitement of the COVID virus, but it plays out to be just a year like it was in 2019. So between August 5th on the left-hand side and the median home price, and currently, still that is a lot, as people who are selling their homes are walking away with about $50K as an average in cash, selling their condos or attached units, and about $84,000 in cash for selling it detached. But if you're an investor, don't count on the market rescuing you by the increased purchase price. We are in the holiday season where we currently normally actually go down in median home price, and we also don't see a lot of inventory come onto the market. Speaking of inventory, so here the inventory obviously we're down year over year on detached, practically to 53%, and we had a slight uptick actually in listings in October on detached, but we have actually seen a decrease in the attached market. So does it mean the affordability kicks in and people have to look at condos and attached units so they can afford it, or even because we have still multiple offers on detached units? So I started looking also at, did we have a lot of more expired and withdrawn listings this year due to the virus, and did people take their houses off the market? So it doesn't look like it. So the light orange one is the year to date, and then the darker orange is for the month of October. So in 2019, you saw a larger amount and also many more listings being expired than in 2020. Now look at the withdrawn in 2019, which was actually quite a lot of units, but for the months it was practically the same. But look in 2020. So everything is selling. If you have a hard to sell property, or a maybe tenant occupied, which is also harder to sell, or under power lines or on a busy street, now is the time to sell and list it. And if they are moving, they like to move where they share their political views with others. And last year, June 2020, or this year, June 2000, in October to 42%. So since we had the highest voter outcome this time and the nation is a little bit more divided on this one, we have seen the polls showing the results in like Arizona and Georgia. And people were asked which candidate will be better for the housing market. And if you look at the overall score, definitely Donald Trump, and also amongst his voters, he was the clear winner. But if you're looking at the renters' opinion, then they feel Joe Biden will be better for the housing market. The mortgage rates maintained at historically low rates. But will it go on forever? There are a few dark clouds on the horizon that could push interest rates up, as in the FHA adverse fee they were trying to roll out but got pushed back in the last 2 months. Also, the Fed might be stopping buying mortgage-backed security, and then there's still the question about the conservatorship of Fannie and Freddie, but there are obviously still 15 to 20 million borrowers that actually could benefit from the refi. So maybe if you were thinking about refining, now is the time, because it will take about 2 months currently as lenders are backed up. Let's look at unemployment or the employment data. As we know, the method has changed how they calculate the number, so it's now at 6.9%, which I think it's a political number. If we're still looking at the U6 that includes marginally attached workers as also part-time for economic reasons, and also that will put the unemployment at about 12%. In San Diego, actually, we're currently looking better at about 7.9%, but please make sure that does not include the unemployed gig workers or subcontractor as under the CARES Act. We still have range about 150,000 new initial claims each week in California, which is better than the 200,000 we had for like the last 3 or 4 months. And how do people feel about buying and selling homes? Will home prices go up? How do people feel about the mortgage rates, and also how secure are they in their job, and did their income increase? It's always very interesting to me that the index actually tanked in May at its lowest point, obviously when the COVID crisis was at its worst. It has recovered, but lately it just went up 0.7 points in October. What helped it to slightly rebound? Actually, people are still thinking it's a good time to buy month over month, and it's also a good time to sell. That increased month over month, but it's still down 17% for sellers, as they are sitting in probably on low interest rates. And if they're selling their homes, where are they going? What are they buying with all the tight inventory and multiple offers throughout the country? People do think that prices will not go up any further and mortgage rates will actually stable, or more people think they will go up. So when it comes to the change in household income, it is no surprise that actually less people think that their income increased. Taking a look at the how people feel about their job security, as you guys can see, the 58% of Americans are not concerned about losing their job, practically reversing from September, where we had a high of 67, but we were down to 50%, meaning practically every other person is still worried about losing their job. That's all not good, and losing your job usually ends up in eviction and a foreclosure, or hopefully you can file for a forbearance. If you have any questions regarding those, if you're a tenant or a homeowner, please reach out to me. So we do see that people have been paying their mortgages better than in May. So we had a steady increase, and in October, the mortgages received by the 16s were 87.3%. Now, that results in a lower delinquency rate, which is down to 6.66%. Also, we have seen a 90-day or an improvement in the 90-day delinquency. So if you're looking at the 90 days, this dark turquoise, so it kind of has leveled off, which is good, but we have seen an improvement in the 30-day and the 60-day delinquency. So in overall, the total delinquency is down. Still, it is still obviously elevated compared to last year. So that results in state-by-state ranking. Kind of California is doing pretty good at a 5.1% delinquency rate, which is still the increase year over year is pretty high, 143%. Where when you look at the number one, Mississippi has a high delinquency rate, but it always has been high, as it's, you know, only a 10.4 year over year change. So I think you have to look more at the change than on the actual delinquency rate. So if you're looking also in Arkansas here, let's take a look at Hawaii should be probably here. You see Hawaii is also not doing well at 143%. And Nevada should be obviously also, as in Nevada, I don't see it very quickly here. Nevada should also see a high increase. So this is the list. And as we see forbearance plans, there is a drop of homes that are in forbearances. And also the weekly applications by week has kind of, it's ticking up and down a little bit in the last two months. But overall, this is good news. So is good news actually that only 6%, or about 1 in 17 of all U.S. properties with a mortgage are seriously underwater. And that number is down from 6.5% from the third quarter in 2019. And here are the counties with the highest share of seriously underwater properties. It's in Louisiana, in Arkansas, in Alabama, in New York, also Texas, Georgia, and Missouri. So good news is that, and actually there's a county in Starr County in Texas. So good news is no California county is on it. And if you're looking obviously looking at the increase in equity or home prices and meaning equity, that's good news. But the back rent is increasing. So here's the rent payment tracker for 2019 and 2020. So if you guys compare here the September rents, they didn't quite have the October numbers out there. Actually, yes, the October number came out, or I should say November, that 80.4% of apartment households made a full or partial rent payment by November 6 in its survey of 11.5 million units that are professionally managed throughout the country. But if you're looking at the back rent or people that it's increasing. So I think we're due for another stimulus, and this might not be good news for multifamily. Here's another, just how divided even the news is, and that it's hard to find good numbers, and everybody has a narrative. Obviously, we're looking at, rents already have been going down in the large urban cities like New York and Los Angeles and San Francisco. But, these headlines are kind of a little bit opposite. Why apartment rents have remained strong through the pandemic. And then on the other hand, it says apartment demand declines as young adults return home for the pandemic. So besides the suburban and urban moving trend, and also, yes, the kids are moving back. I think it's the highest, over 50% in the history. But the real bummer is the crisis in commercial real estate. There's commercial and multifamily mortgage loan originations decreased 47% year over year during the third quarter, according to the Mortgage Bankers Association. So not a lot of volume and properties changing hands. Office properties and healthcare properties took year-over-year losses of 58% or 53% respectively. The appraisals on hospitality and retail properties have averaged about 27% drop in value from when the loans were originated. So that is obviously a pretty big concern. But here are your updates on which props passed. Prop 19 and Prop 22 passed and defeated, got the rent control and the split commercial property tax roll. The takeaway is that delinquency and forbearances rates are still to watch. We still have the coronavirus effect on commercial real estate in full swing. We have a new president that will determine a new political and also the housing climate. And remember, real estate is not just local, it's really hyper-local. Even within San Diego County, not all zip codes perform the same. San Diego's median home price is stalling, and we don't know if it is due to the seasonal changes we normally have, or if we really have reached the top of the affordability. And it's as important right now to own the right asset class in the right location. And wait, there is more. As always, if you like to get more education and to exchange with like-minded people, we for 12 years we've been meeting the third Saturday of each month, and now it's playing on Zoom. Next one is November 21, and we have a series currently looking and running numbers on the 5 most profitable fix and flip series. You find me on Meetup at Real Estate Investing Field Trip. If you want more economic update and dive more into the numbers, our money making Monday, Rethink Real Estate Investing, also found on Meetup. And don't forget, after all, it is Happy Thanksgiving. Celebrate it with your friends and family. Might be a smaller party this year, but I'm sure the turkey will be delicious. So don't forget to set your scales back 10 pounds this week. Thank you for listening. Don't forget to subscribe and hit the like button or even a comment.